Ahoy there, swing traders. How are we all doing? Another week has flown by again. Exciting times for swing traders. Just exciting times generally. So if you can't tell by my little intro slide, I thought I would mix it up a little bit. Let's do a Ask Me Anything. Ask me quite literally anything. If I know the answer, I will say. I'd like to let me rephrase. Let's see if we can keep it to swing trading or trading relating or options related. The last time I did something like this, quite literally, ask me anything could mean ask me anything. And someone asked me what's the boiling point of mercury or something bizarre like that. So nonetheless, let's keep it trading related. If you want to ask me about my background trading, or I'll if it's relevant, I'll certainly do my best. Failing the questions and answers, I can basically do what we normally do and go and look for something to trade, which we'll be doing later anyway. But I just thought we'd mix it up. Nonetheless, typical agenda for our swing trading workshop at the moment is we'll normally spend 20 to 30 minutes and up to about 60 minutes. And as you know me, we usually go to about 60. We're going to be looking at, trying to ask anyone's questions. So feel free to type them in the chat box. If you want to hop on the microphone, just raise your hand and I will... that I should be able to. Yes, I should be able to just click a button. And if you've got a microphone and you want to have a chat, you can certainly ask your question. Right. So if you are new to these sessions, my name is Phil Newton, and for more than 25 years, nearly 30 now, actually, I've been helping traders turn their knowledge into profitable trading results. Here on Art, I'm going to attempt to be your personal swing trading mentor, just like I've helped many people, just like Steve, just like Anik, just like Joe, just like Kyle, just like Colin. I actually reconnected with my old school friend. This is a lad I used to go fishing with, actually. But ultimately, people get results. I can help you get results. People tell me what they're doing. We navigate the murky waters of the stock market, and ultimately people get results. Primarily, though, I am a trader. I'm just a regular guy. I do love a good ramble, a read, a coffee. Strangely, I like flamingos. I like generally being outside and with nature and animals, and basically just exploring my environments. Again, I'm not a Wall Street guru. I'm just a regular guy who wants to, firstly and foremost, enjoy himself. One of the things that I do love doing is helping traders, which is why I do these open house sessions on a Friday. And again, ultimately, you can work with me a little bit more closely. We can talk about that later. The methodology that I follow, I typically refer to as production line trading. There's 3 elements. I try and explain that broadly speaking every week. We have a mechanical scan. This is pretty much the secret that allows me to not be glued to the screen all day. We just pretty much zero in on the best stocks today based on time-tested proven research. We visually confirm with one of our 6 money-making patterns, and the trade craft element is entries, stops, targets, any in-trade management. So it's just broken down to 3 categories. It is simple to replicate. It gets results because, as you saw a moment ago, my students tell me that they get results. If you're watching this on the replay, you can press pause. There's the full history of who I am and what I do. And as I mentioned a moment ago, there is a commercial intent. If you want to work with me more closely, I will invite you to work with me later. It's it's optional. It's your choice at the end of the day. I don't do any hard pressure nonsense, but if you'd like to learn more about production line trading, then just know that you can work with me more closely. Again, I'll talk about that later on today. Production line trading is a methodical, systematic approach to find, filter, and sort stocks and manage trades. So, as we said at the start, we're going to be doing a little bit of Ask Me Anything. So again, if you want to hop on the microphone and you want to talk, by all means, please feel free to. And Kim's very kindly started the ball rolling with a question. Ask me anything. I have 10,000 to invest. What's the best way to start? I think first and foremost, I think this is what not necessarily the confusion is, but it's just where do you start can be different for everyone. And I always find this, it's not an impossible question to answer. I'm trying to give this an honest answer rather than just the usual, buy my program, it's amazing, you'll make loads of money, because that's bullshit. It really is. It might be right for you, but then again, I don't know until we talk about it in more detail. But where are we there? Let me just pop that question there. So I have 10,000 to invest. What's the best way to start? I think the best thing to do is to start simply. Don't worry about the best tools, the best indicators, the best stocks, the best charts, the best platforms, the tactics and the tools. I think more people get bogged down with the tactics and the tools. And these days, it's not really necessary to worry about those things at the early stage. The best thing to do first and foremost is to think back into it. Basically, what time do I have available? Because that's going to help dictate the direction for what is the best way for you. So the example I usually give is there is no point learning how to day trade, no matter how much money you see other people making day trading. And again, I spent 12 years doing it. It works. It makes money. It makes money hand over fist. But today, fast forward 28 years, I hate doing it. So for me right now, it's impractical because I don't enjoy it anymore. I used to, but I don't enjoy it. And similarly, I don't want to do it because I want to do other things. I want to spend time outdoors. I want to do stuff. I don't want to be glued to the screen, which is the trade-off. There's a little bit more time involved with the short-term trading. It's not impossible, but nonetheless, there is a time commitment. So that means that my style of trading, my personality of a trader, and we spoke about this in last week's session a little bit as well, is to figure out like, what's your situation before you think about strategy and tactics and, you know, the specific strategy elements. Just think about like, what are you attracted to in the markets? What are you looking for? Again, money's a byproduct of the process. So don't worry about the process for the moment. Money will come naturally later. But if you've got a busy schedule, a busy lifestyle, if you've got family commitments, work commitments, if you've got limited time, then that means that something like day trading is off the table. That means that something like short-term swing trading on, let's say, a 60-minute chart to get paid at the end of the week might also be off the table unless you've got a little bit of time to check in once or twice a day. If you can only check in once or twice a week, then it's going to be daily charts and swing trading is the choice. If you can sit there all day, every day, and you want to day trade, well, that is a choice. But also because you've got $10,000, then you're going to be restricted to with the pattern day trader rule. So you have those restrictions. So I'm just trying to give you an illustration of the first thing I would look at is like, what do you want from trading? You know, how much time do you have available? And then you can start thinking about, okay, well, what's interesting? You know, what do I find attractive? For me personally, I was when I started out, I was interested in the patterns, the pretty little pictures on the charts. So I started to explore chart reading and chart patterns. And again, for me personally, I want a mechanical system. So again, what I'm trying to describe, it's not a case of what's the best way to start, what's the best pattern, you know, what stocks do I buy? We're trying to figure out, okay, if I'm going to be doing this for the rest of my life, I mean, that's probably another way of thinking about it. If I'm going to do this for the rest of my life, like I want to make sure that I have the ability to do it. I enjoy doing it. It's not a daily chore. It's something that I would enjoy doing. Does that kind of resonate first before I get into some specifics? So let me know where that landed, Kim. And for anyone else who might be thinking about something similar, but does that kind of just help just lay the foundation? And then we can start thinking about some direction. Again, it's probably not the answer you were expecting, but you know, that was, I mean, again, I had many epiphanies over the years, and this was actually one of them. The kind of, I'm just trying to think, like a major turning point for me was when I was 19. I got into the trading thing very early on. But when I was 19, I was reading yet another 1,000-page tome by Jack Schwager on futures. And I was on my third read of it. It's an absolute monster of a book. But at no point in there did it tell me how to do any of the things that it was describing. It was just quite literally, here is a perfect example of this. Here's a perfect example of that. Here's the author's perfect illustration of this, 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 and this. And there's textbooks that are full of them, absolutely full of them. But one of the things that I sat there on that sunny Sunday morning, and it was at no point did any of these textbooks say how to actually enter the markets at the appropriate point. And this is where we start to think about strategy and patterns and all that stuff. And that's what started me on the journey of, I need to put the books down. I have the knowledge. It's all in my head. It may be a little bit disorganized at that point. And I started to look at the charts. How do I find the optimal point to get in the trade so that I can enjoy the fruits of my labor and not get in after the fact? So that's where, as you say, we start to come into thinking about strategy. So I want simplicity. So the next thing to start is, okay, well, let's look at the charts. Let's look at the charts. We do this every week. So one of the things that I want to do is, now that I know, let's just say swing trading, you want to commit 20 to 30 minutes a day, or 2 or 3 times a week, you might want to spend 30 to 60 minutes, just sit down, manage your accounts. The other thing that we need to consider with a $10,000 account is you're going to be restricted. And it's just a practical situation of your situation. So maybe start with a really small list of stocks. This is, if you want to take a screenshot, feel free. But this is a small list of stocks. And these are all good performers, but they've also got lower dollar price points. There's a few Apples, there's a few AMDs in there, but they're generally all lower dollar stocks. And this is so that you can have that low cost, and you can have this small portfolio strategy experience. I mean, the idea, if we just go to Apple, the idea is that when you've got a small universe, it means that you don't have to worry about the 28,000 stocks that there are in the universe, because on the US markets, there are 28,000 stocks. So again, we're thinking about the specifics practically. Again, we're going to take that same logic and back into where do I start with essentially a small account? But there's 28,000 stocks. Which ones do we look at? We've already excluded day trading. We've already excluded some other things. I like to trade with stock options. It's more capital efficient. So another choice that you might want to consider is look at a stock option. We don't have to worry about all the fanciful option strategies. Just how can I replace a stock trade with an option? A stock replacement strategy is how it's often referred to. We can start thinking about those things, but I want to take that universe of stocks just on the US markets from 28,000 to something sensible, to something manageable. So if I look at the most liquid stocks, that just means that they've got a lot of volume traded. So why would we want a lot of volume? Because we don't want to get caught up in AMC. Now, I know that AMC, the meme stock, it was potentially going to give you it went from $10 to $70. Who wouldn't want to be on that? But these don't happen that often. We've got several factors came together last year and this year. I'm sure I don't have to spell them out, that created this situation. This has never happened before to this extremity. Pump and dumps, they do happen, but they happen because of low liquidity, low volume, low trading. And again, a lot of other things kind of come together to create this weird behavior, this pump and dump. It usually happens on penny stocks. So I don't want to be involved in that. There's a little bit of extra, it is a strategy, but there's a little bit of extra efforts, discretionary efforts involved. I want to be able to just tune into something that is liquid, it's tradable. And I don't know if you remember, but earlier in the year, the stocks like AMC, GameStop, and some of the other pump and dumpers, It was very difficult to profit from them if you weren't looking at them. Everyone was trying to trade them after the fact. And again, I'm just thinking of silver, SLV. At the same time, earlier that year, I don't know if you can just see that, but the small retail traders tried to do the same thing on silver, which is a liquid instrument. On average, you can see their attempts. You can manipulate low volume stocks, low volume instruments. So one of the things that I want to avoid is the weird shit that happens in the markets. I don't want to do that. And again, the Wall Street Bets group, the crowd, the collective community can move and influence low volume stocks, low volume instruments. And it sounds great, but when they try and do this on a liquid stock, or in this case, an ETF, this is basically an ETF that represents silver. There's 23 million shares on average on a typical day traded. And then there's all the futures contracts. There's all the other stuff that goes along. This is just on the ETF. They tried to manipulate this and they managed it for one day. That's why I like liquid stocks. They can be pushed around. It does happen. But when you go and look at something like AMC or GameStop, it's low volume, low, again, all the way back here, it doesn't see much trading. It's not a great opportunity. So the things that I want to avoid. I don't want to be on the wrong side of something like this. Great if you're on the right side when it happens, but I want to trade liquid stocks. So again, coming back to that universe question, I've got a small capital. I want to bring that big universe down to sensible stocks. So I want to exclude the penny stocks. I want to exclude the low floats. I want to exclude the low volume. I want to exclude all the shitty stocks that are like the pink sheets that you see on the movies like The Wolf of Wall Street. I want to get rid of all the nonsense. Again, think about it like if you had a product for sale in the real world and you went to the markets and you tried to sell it and no one wanted it. There was not a market for that product. Fidget spinners, great example. They were a fad. You may have seen them. But you try and sell a fidget spinner at scale today, you're going to get laughed at. No one wants them anymore. They were a gimmicky toy that was great for a couple of weeks, and now you can't give them away for love nor money. So that's the same thing with low float, low volume. You can get in, you can buy them, but trying to sell them, it's going to be difficult. And again, just trying to really emphasize, what I'm trying to do. I don't want to stress over if I'm in this trade, can I get out? So this is what I'm doing. So I'm looking for liquid stocks. And when you apply the option element, does it have options? Yes. Does it have good volume? Yes. Does it have all the things that we've mentioned? Maybe if you want to go into it, and is it household name? Is it well known? Is it respectable? You can go into all of those things and you'll end up with a list of about 2,000 stocks. That's still a lot of stocks. So what I've done to help assist with, like, how do I get that number? That really is the tradable universe. We can forget about the 28,000 and we can focus on the 2,000 stocks that make the most sense. So they're realistically what I'm interested in. They've got options, they've got volume, they're regularly traded, they swing, they ebb and flow back and forth. So what I want to then do is only focus on those stocks that have the best candidates, the best opportunities. So that's still a lot of stocks to look at, but that's my universe. It makes it more manageable. So one of the things that I've done over the years is I've systematized my swing trading strategy. So I've just popped an algorithm on the chart there. It's one of the strategies that I teach all my students. And what I can do is I can look back on something like Apple, and it's just going to help me filter down the stocks. So now of those 2,000 stocks, I can say, I want to swing trade. Again, we've gone through that in a variety of previous sessions. I'll touch on it again in the future. I've got a swing trading strategy. I want to profit from the ebbs and flows back and forth on the charts. I want to do it on a daily chart. I don't want to be micromanaging my trades. I basically want to put the trade on. I want to know that it's going to produce the goods. I want to trade with options. I've got a list of stocks to test my strategy. Again, a simple strategy would be buy the dip. Again, we speak about this most weeks. So we're looking for a trending stock. And when it retraces, I'll be looking to buy and profit from the subsequent rally, just like you can see there, So that's what I want to do. That's the basis of the strategy. We've spoken about it in detail in past sessions, so I'm just skipping over it right now. But that's what this does. It's looking for stocks that are trending. They are trending strongly. And when they show those characteristics, then it's going to place a trade. And that's what this is. This is since 1999, using that strong trending characteristics. Steve, yeah, absolutely. Thanks for your comments. When you have those strong trending characteristics, I can apply that to those 2000 stocks. And as you might imagine, it takes a little bit of time to do that. It's well worth it. I've spent time researching and looking for the best stocks, the best candidates. And there's other things that you can do to kind of take that 2000 stocks down further. You can make it more manageable, but it takes a little bit of time. It's well worth it. I do it once a year and I manually check. And now I've got these automation tools because I'm not a programmer at heart. I've had to hire someone. Again, I'm not that clever. I've got a simple strategy that works. And what I'm able to do is not only validate the strategy, I'm able to see which stocks. So again, coming back to your original question, if I've only got $10,000 to trade with, then I want to know that I'm looking at the best stocks, the best candidates, the best opportunities, and it's probably going to be a handful of stocks. So I can look at the best performing stocks with the most liquid opportunities that have options, so it's not capital intensive. And I can apply this algorithm to say, what, should I be trading this strategy on this stock or this group of stocks? Because some strategies are great and some strategies aren't on certain stocks. So for example, if I look at this strategy on Pepsi, if I look at, let me just take that off for a moment. If I look at the strategy on Pepsi Cola, now Pepsi, household name, great company, maybe not such, maybe you're a Coca-Cola fan, I don't know, but you've all heard of the company. It's a good stock. It's a good company. It's been in business for decades. It's got good dividends, all the things that textbooks tell us. But because I want to swing trade stocks and profit from the ebbs and flows back and forth, I want to know, is this a good swing trading stock? So I can quite literally, at the click of a button, validates the strategy. Okay, this is now not looking like a good trending stock. It doesn't mean that I can't find good trades on it. It just means that I'm not going to have it in my universe. I can do other things with it. It's not that it's not a bad stock. It's just for this strategy, trend trading, Pepsi Cola is probably not a good stock to trend trade. Now, it may be a good stock to do other strategies on. Again, other strategies that I use are cash flow strategies, where I can sell premium, knowing that this stock doesn't trend and it doesn't move on a regular basis. That makes it a good candidate to, well, I can, instead of buying options and profiting from movements, I can sell options and profit from it not moving. And that's a kind of like a cash flow or an income strategy. So I can start to think about, like, how do I want to trade Pepsi versus a different stock? Does this help just kind of like some of the things that I'm thinking about? But it also hopefully lets you know, like, why this group of stocks, the best stocks, and I know that I'm going to trade options. So this list of options is great for small accounts. They've got under $3 options, the at the money $3 options with 100 days to expiration. So they're affordable. If 2 or 3 stocks set up, I don't have to cherry pick the best opportunity. I can just trade the opportunity as it presents itself. Because what this allows me to do, having this strategy, having it tested, having it proven, having it validated, as well as having traded it for the last 20 plus years, like I can say, okay, this is the best stock for this strategy. I don't need to think about it. Even if I place the trade, I should be able to make money by accident. I don't have to worry about, is this a good stock? Is it a bad stock? We've already proven that this is a good stock. It's a good stock for this strategy or trend trading strategy. So when you can bring the 28,000 stocks down to, the next thing we're doing is we'll bring it down to 2,000. We're going to bring those 2,000 down to, again, going through them one at a time. We've now got them down to 15 stocks. So one of the things that you want to consider before you even place a trade is, do you have the right universe of stocks? And what I mean by this is my universe. 15 stocks here is my universe for the small count style. And it means that I can have confidence. And then we can just ignore everything else. We can ignore the AMCs. We can ignore the news. We can ignore all the bullshit that goes on around us and just say, when the trade sets up, the trade should go on. And I can just simply place the trades with confidence, knowing that this has a positive expectancy strategy. And over the long term, I should be able to make money. And that's, for me, all that matters. Real world example is if you tried to sell everything to everyone and try and do everything, you're basically saying, I'm Walmart, I'm Amazon, I'm trying to sell everything to everyone all of the time. I've got millions of products. And if you tried to start your small business on the high streets and you had to buy a little bit of everything, to try and sell a little bit of everything to everyone, you would discount that very quickly. You would go, you know what? That's probably not a good business model. That's probably not a great idea for me to sell dollar products to the mass, like a little thrift store. Again, I'm not bashing thrift stores, but again, we're in it to make money. We want to make good money without having to sell our soul to the devil, as it were. And that's what we're doing here. That's what most people do. They're trying to look at every stock every day, all of the time. They've got this FOMO, this fear of missing out. AMC's moving, GameStop's moving, the media, the noise, the minutia. Well, let's just blinker the media, blinker the news. Let's not worry about what other people are doing. Let's not worry about day trading strategies. Let's not worry about, this strategy, that strategy, the other strategy. Let's just stay in our lane. Let's figure out what time I have available to trade. Let's figure out what style of trading. Again, we talked about personality of a trader last week. So this question kind of bleeds into what we spoke about last week. But this just adds a layer of detail. I don't want to be Walmart. I don't want to sell a little bit of everything to everyone. I want to be a specialist. I want to have a pinpoint laser focus. And arguably, you could still say that with 2,000 stocks, when we apply what does it have options? Does it have liquidity? Does it have all the things that we mentioned? Arguably, that's still Walmart. We've still got 2,000 products. But when we come down to 15 stocks, if we think about some of the specialist businesses out there, like Apple, for example, Apple has a small product range, and it really took off when it focused on one stock, one product. Back in the early noughties, when Steve Jobs came back to Apple, they had lots of products. They had lots of variety. They were trying to do a little bit of everything, to be a little bit of everything to everyone. And it was impossible to make the business work, to be competitive in the way that they wanted. So the first thing that Steve Jobs did was to get rid of all the products that were a headache, a frustration. And they focused on one core product. And that's what they did. And then that created the backbone for them to start doing other things. Because Amazon, again, they didn't start out selling everything to everyone, although it seems like that's all they've ever done. They started out selling books online back in the 90s. And they got that business model absolutely nailed down. And quite literally, they broke the back of the bookstores on the main streets. They literally took over the world first and foremost by selling books. They specialized in one thing. And then they started to add other. And that's what this is. That's what this means to me. That's what I'm saying here. With a small universe of stocks, you are a specialist in 1, 2, 3. And if 15 is too many for you, look at 5. just apply, just pick any 5 of those stocks that make sense for you. But you're going to focus and specialize on a small group of stocks because that's where your situation is, and you will make more money. You will see more success by following a simple strategy on a small group of stocks that makes absolute sense for that strategy before you even look at the specifics of entries, stops, and targets. You can, again, as I said before, by accident, we should be able to make money. If we just follow a simple trend trading system on this group of stocks, we should be able to make money because these are good stocks that have proven themselves time and time again. I'm not going to worry about missing out. I'm not going to be doing what every novice trader mistake that makes, which is jump from chart to chart, from indicator to indicator, from time frame to time frame, from strategy to strategy. Just focus on one thing. And okay, how long did Amazon focus on books? Was it 10 years before they actually started looking at other stuff? They focused on one thing. Let's just get really good at selling books, and then we'll worry about the other stuff. And now they've effectively taken over the world. Apple, let's just get really good at one thing. And what was it? Was the was it the iPods that they kind of launched themselves on? I think they just got really good at the iPod. I'm probably mashing that up. My recall of the details is a little bit foggy. It was several whiskeys ago. Awesome. Well, Ezekiel, thanks very much for your kind words. Hopefully you're getting a lot out of it today. Yeah, absolutely. 30 years condensed into 60 minutes. Thank you for your kind words, Zeke. So does this ring true? Again, I know this is just one question, and I'm kind of trying to answer the others by proxy by going in like deep into this one question. But does this help, Kim? I mean, I appreciate we've not talked about strategy yet on this episode. We've spoken about it many times in previous weeks. I'm presuming that you've been here, but I think it's just an important consideration. This is the foundation for success. Again, if we think about, I take my own advice. My universe of stocks is tiny. Most of my trades are placed on that group of stocks. That's it. Most of my trades. It's not many. I'm making a good chunk of change without having to worry about missing out and AMC and what's China doing. I'm very happily ignorant on many things, world events, current affairs. I honestly don't care about the noise because for me, that's noise. I don't need to worry about any of it. Focus on a small group of stocks, become an expert at one strategy, and you'll do well. Again, for 12 years. Hopefully the just validating the strategy. Again, if you want to look at some of the other stocks, again, this chart, this visual chart here, this is without applying money management. So when we apply money management, this is just what I refer to as signal to signal, which is the worst version of any strategy. Yeah, small group, absolutely, yeah. So you can take your selection from, any of these stocks that you can see on my screen here. These are all great performers. So hopefully it just explains, like, this is why I'm trading a small group of stocks. These are awesome stocks for this strategy. Now, will it guarantee the next trade being profitable? No, I'm not going to blow wind in anyone's sail to say that the next trade is going to be amazing, because it may not be. But it gives me confidence to know that maybe just the next 30 days is going to be awesome. And that's all that matters. The next 30 days is going to be awesome, because for the last 20 years, this stock's done okay. And maybe just the next 30 days, I'll do okay. And you can see consistently that again, I'm just pressing enter. I'm just going down this list just so you can see. This is why this list of stocks is on there. These are great performers. Like you can see here, Mac. It's not been great. It's not been great so far. It's meandering sideways for the last few months. That's going to happen. But this is why we have a portfolio. Even if it's just 5, 10, or 15 stocks, sometimes it's just not going to work out the way that we want it. And that's okay, because something like Marriott will pick up the slack, which is now finally starting to move. It's been in a trade, it's starting to go. So pick the best stocks, and then you can start thinking, about strategy. Again, I like to swing trade. And then you can start thinking, okay, these are good stocks for this strategy. Again, hopefully this just illustrates the historical performance. Again, I've got to say, I think legally I've got to say it. Like, it's no guarantee of future performance, but you know what? It gives me confidence. Like, I know I've got the right stocks. I know I've got the right strategy. Maybe the next trade's going to do okay. That's the best I can say. I don't know what's going to happen tomorrow. No one does. So I know that when I layer on solid, sound money management strategies and tactics, that I should be able to, outperform the markets. And, 28 years later, I'm still here. It's clearly working. There we go. So hopefully you just a little bit of a round robin on the stocks and the performance. So where do you start? We want to take our time, I think, is what we're thinking about, Kim. What do we want? What do we want? Yeah, I think picking the top 15. There's a good start. Take a screenshot, feel free. You've got my active universe. These are my super duper ding dongs, as I like to refer to them very flippantly. These are the top performing stocks. Again, some of those, again, for a $10,000 account, you've got to think about as well, like, what can I afford? And again, it's just a practical thing. Whether you've got 10,000 or 10 million, everyone's still got a number. What can I afford reasonably, a budget, for want of a better description, on this one single trade? It might be 300, it might be 500, it might be 1,000. I don't know what your number is. And again, regardless of your personal net worth, and again, thank you for being open with me and the group. It's just a fact of reality. It's where your situation is. So what you want to think about next to help with the which 15 is, like, what's your number? If I was to place a trade, like, what am I prepared to risk? And let's just for argument's sake, let's just pick a number. Let's just say that's $300. $300 would be sensible. If I was to lose $300 on this next trade, I think I'd be okay with that. And maybe that number is 100 for you. Maybe for the next person, it's 500. Personally, my number at the moment is $1,500. I'm happy to spend $1,500 on a trade. I'm okay with that. It's not going to break, for me, it's not going to break the bank. And that's just where I'm at. Again, it's just what's your number. It's practical. Now, here's the thing. I can afford more than $1,500. Practically, I can afford more. But my personal mental number is $1,500. This is my number that means that I don't lose sleep. Do you understand the difference between a practical, say, 1% of your accounts or 2% of your accounts per trade versus, like, your emotional number? Because that's I can sleep at night number. I can sleep like a baby, and I can have 30 positions on with that number per trade. I sleep just fine. That's what I'm trying to manage. So don't worry about it's got to be 1% or 2% or 4%, whatever percentage of your account equity per trade. Just think about, like, what's a practical, sensible number? Think about it like a budget. You've got a budget per trade. Just like you might have a household budget or a shopping budget or whatever else. I've got a trade budget. I've got a risk budget. Okay, what's that number that's going to help you sleep at night? Because there's nothing worse than having a trade on and it's got too big position size, and you just stare at the ceiling. Your eyes are wide open. You're looking at the ceiling, and you're wondering where the market's going to be tomorrow. And that's a horrible, horrible way to live. That causes stress. It causes anxiety. You're going to snap at your family. You're going to kick the cat if you've got a cat, the dog if you've got a dog. You're going to neglect things. You're going to be pissed off. Maybe you'll have one too many whiskeys at the weekend. I don't know. But it's a horrible place to live. And you've only got to Google and hit the internet to see the people that do that. And now you're aware of this. You're all smarter than those other people. So what's your number is a more realistic way of thinking about, like, what's my risk profile is the fancy highfalutin way of saying it. What's my number? What am I prepared to risk? And if I was to lose that tomorrow and on the next 3 trades, the next 4 trades, all right, it's going to be frustrating, but it's not going to kill me. It's not going to break the bank because I've got the ability to be in business tomorrow. And placing the next trade is more important than the outcome of today's trades. Let me say that again. Tomorrow's trade being able to place the trade physically and practically and mentally is more important than the outcome of today's trade. Because if you're not in business tomorrow, you've got no business. So hopefully that just reinforces the kind of the next thing to consider. And then lastly, we can start looking at strategy. This is a very long answer to your question. Everyone's question, I'm kind of touching on everyone's questions as they're all kind of interwoven and related. So it's not, don't feel that I'm picking on Kim or I'm not calling your name out. It's just that they're all kind of related today. So then we can start thinking about strategy. What do I want to do? I want simplicity. I absolutely want simplicity. Let's use Domino's Pizza as an example. Domino's Pizza. You've heard me go through the strategy many, many times, so I'm just going to quickly rattle it off. My drawing widget has crashed. Bear with me a moment, folks. Bear with me. Yeah, Rajesh, if you've got a smaller budget, absolutely. So there was a follow-on question. If you've got a smaller account, say $1,000, would we look at, say, a budget per trade of 100 or 50? Only you can answer that question first and foremost, because that's your number. Now, if you do have an account that size and you want to trade the portfolio style trading, then use a debit spread. You don't have to buy a single call. Again, I'm a huge advocate of options. Options are not as scary as the media makes out. They are actually fixed risk. So if you buy a $3 option, you control 100 shares. That means that your risk is $300. So for you, that might be out of budget. It's, unattainable for you. So if you want to have that portfolio experience, then you've got to make that trade more affordable. Again, you can use something called a debit spread. Again, it's a little bit beyond our session. So you would buy an at the money option and you would sell an out the money option, and you would make that trade more affordable. You're spreading the cost. So just give you a quick answer. So you can construct a trade that would bring the same trade idea, and you can make it down to, say, a $50 trade. So it can be affordable for your account. This is one of the beauties of using options. Now, here's a little twist. Before you get put off by the options, and depending on how you set it up, you can set that trade up in such a way that you could actually make more money, a bigger return with a debit spread by fixing your risk and rewards than you would do with a $300 option with unlimited rewards. You might have to watch that back on the replay, but let's answer the question. Right, so let's think about strategy. So I want to find opportunities. I do a lot of my work in the watch list on the left here. I can see what's trending, what's not trending, what I should trade, what I shouldn't trade. If you don't have that, that's cool. We're looking for the 200 period. We're looking at the 50 period. And we're looking at the 20 period moving average. So the first thing I'm looking for is, what's the trend? I've got a mechanical trend. The 50 is above the 200. Great. Mechanically, I'm expecting to see a trend. Now, the next thing that we want to do is we want to make sure that that trend has been in that trending state for at least 40 days. These grids in the background, these are about 20 days. It's 1 calendar month. Take out the weekends, it's about 20 days. So I can see that visually, since the cross, it's been in that trend for about 40 days. It's about 2 months. So great. So from this point onwards, I'm interested in Domino's Pizza. Great. I'm looking to buy the dip. So all we're doing is defining what a trend is. Numero 3 is I want to see that price is moving as a percentage, or I can do this visually. But ultimately, I'm looking for, is the stock moving? Again, as we're looking at this chart, we can see from the cross and prior to the cross, we can see that it is going up. It starts almost at the bottom left-hand side. It finishes at the top right. Visually, we've got a trend. That's what we're looking for. We've got a trend. Let me just go to Pepsi. No trend. No trend. It's going sideways. Leave it alone. DPZ, Domino's Pizza, trending. Can everyone see that? Trending. That's what it looks like. There we go. So find the trend. Just because you're looking at a chart doesn't mean that you should trade the chart. find the trend. Then, now that we've got the trend quantified, we know what we're looking for, 3 rules for the trend, we can start looking for the dip. The dip. Just because price is selling off doesn't make it an automatic buy. So now from the top right, we can see that we've got a dip. It needs to come below the 20 or the 50 period moving average. There's the 20, there's the 50. So we can see that price is below both the 20 and the 50. Now, again, just because price is selling off, it does not make it an automatic buy. Just because price is dipping, retracing in the context of a trend, we've got the trend. It's going up. Fab. The dip price is retracing. This doesn't mean smash the buy button, which is what all the idiot traders do on the internet. Oh, I've just lost $20,000 on a trade. Why isn't it going up? Because you're an idiot. You know, we want to wait for price to turn around. So we're going to wait until price goes, let's just keep it simple, the 50 period moving average. When price goes back above the 50 period moving average, I will be a buyer. Great. Until that happens, I'm going to wait. That last comment is probably the most important thing that you can ever do as a new trader. Wait. Wait is how we make money. Waiting for our entry, waiting for our point on the chart, waiting for a trade to produce a profit. Waiting is how we make money. Doing stuff is not going to make you money. Pressing the buy button like it's a game of Mario Kart or Nintendo or whatever the kids play these days is not going to make you money. Waiting is the name of the game. It's a weird career choice that we get paid to wait. Just like a security guard, we've got to be protective of our money. We've got to be protective of our profits. And that means that we need patience. So when price goes above, I can buy an option, an at the money option. I can buy a debit spread. And typically what I do is I normally target the first targets, just so you've got where's it going. I normally target a small target. A retest of the recent high is where I go. And that's what I would normally do. So now you've got a back of the envelope way of buying the dip in an uptrend. This is one of 6 patterns that I trade. One of 6. This is one of 6 patterns that I trade. And this is the one that, it's the most profitable one. There's a natural bias in the stock market to go up. So this is the one that typically and historically works. But this is how I buy the dip. Before you know what the dip is, you need to know the trend. So you apply this on these or your top 15 stocks, whatever makes sense to you, then that's your strategy and they're your stocks. I think that's it. So where do you start? I think you've got quite literally a back of the envelope way to approach what you need to do next. So Kim and everyone else that was asking similar questions, and Rajesh, everyone was asking similar questions. That's what I would do. That's the start. Start with one stock. Start with one stock. Which one? Doesn't matter. These are all profitable. These are all good, historically profitable stocks. In the last 20 years, you put $1,000 in 1999 and trade this setup. When it sets up, it's produced $20,000 in the last 20 years without compounding. Imagine what it would make with compounding. So without compounding, that's what these. So these are what I refer to lovingly as my super duper ding dongs, because they are super duper ding dongs. Oh, yes, I am silly and I am an idiot, and I'm quite happy to be that way. Awesome. So I think that's a good place to land the plane. That's a good place to finish. So you've got everything that you need to trade that one strategy. So I think this has been a good session. Wasn't expecting it, but nonetheless, thank you everyone for your questions. I think we've answered everyone. Let me just quickly scroll back. Again, I've been answering them as they go because they've all been related. If I've not answered your question, let me know and I'll try and answer it right now because it isn't Ask Me Anything session. Right. So, so let me ask you a question. Let me turn it around. What was your biggest takeaway today? What was your biggest takeaway today? And if you want to hop on the mic, feel free to. I don't see anyone raising their hands. If you are raising the hands, it's not coming up on the Skype. Yeah. Glenn says patience. Well done, Glenn. Thank you very much. What was your biggest takeaway today? There is hope. Absolutely, Kim. Yeah. So biggest takeaway, is there a book or course that teaches this? The best books on the mindset, Kim, are, I think you're going to be into the self-help type books. Let me just find, actually. It's difficult. It's difficult. Is there a book or course that teaches? It's one of those things that comes with, you're not going to like this. It comes with patience. It comes with practice. It comes with experience. But I think one of the things that can help is meditation. I meditate every day. I kind of cheat. I use, where's my, I'm just Googling it on the other point. I use a company called Centerpoint, which is essentially binary beats, which means that you don't have to do anything. I think these days you've got playlists on Spotify for binary beats. You can certainly use the alpha mindsets and stuff like that. I'm just going to paste it to everyone. So this is a link. That's who I use. I've been using them since around 2003. Oh, go on, press enter. There we go. I've been using them since about 2003. It's called Centerpoint. And essentially they offer binary beats. And essentially what it is, it's based off Nobel Prize winning research. Despite anyone's reticence with them, I promise you I'm not going to get the beads and tree hugging and start shouting om and moo and all that stuff. I'm not that person. But I can get behind the logical reason, that the science behind it. Basically what it does is, if you want to meditate, everyone think, oh, imagine paper and, clear your mind and all that bullshit. But binary beats is a little bit of a cheat. What it does is, for example, it plays 100 megahertz in your left ear, 110 megahertz in your right ear, and then your brain fluctuates at the difference, which is 10 megahertz, which, if you Google it, is an alpha mindset. It's a good mindset for learning. It's a nice shallow meditation. When you read, you generally form a shallow form of meditation, this alpha state. When you watch the television and you're really into the program or the movie, and the 2 hours or the hour just disappears, you've been in an alpha state of mind. You've had a very shallow form of meditation. So that all those experiences can do. So what I do is I listen to this. It takes me down to deep delta 4 megahertz levels. Again, I'm a little bit nerdy, but this is what I do to help with the mindset side of things. I meditate daily. And I've been using that particular program for, since about 2003, I think it was. So a long time is the point. I am an advocate of that. So how can you develop patience? You can start playing things like mind games, chess, crossword puzzles. It also helps with the mind and the exercise, because you've got to be patient to work out the answer. Sudoku, is that pronounced right? It is now. Is another way that you can firstly flex your mind, but also develop patience, because you've got to sit and work out the answer. Again, chess is a good one that requires patience. You also flex the mindset. You also start thinking about strategy and moving things along. So these are all things that you can do. So it's not necessarily a course on mindset and behavior. I think doing things that helps develop mental fortitude will naturally help you build patience. And other things that you can do, it reduce just general life support, is turn social media off. I use social media, but I restrict myself. I log out. I've turned the ringtone off. My phone, I don't wear a watch, just things in life. How can I lower my blood pressure? I've got Crohn's disease. One of the other reasons for me doing this are I've got health issues. So I'm trying to manage my stress levels at all times. And it's just a way of life that I've developed. And so other things that I might do is go for long walks. I generally work out, I exercise. I want to just generally have, again, low blood pressure, take the watch off, just those little things that add up, drink plenty of water, make sure I'm hydrated. It's silly little things, but just those incremental changes, really will significantly impact. So again, coming back to is there a course on patience? Is there a book on course? Again, there's lots out there. I like a guy called, another website I like is Paul Sheely. And I think it's from Learning Strategies. Let me just get the link. More of a self-help. Learning strat. Oh. It's learningstrategies.com. Yeah, there we go. Got it in one. So they've got some, if you want to kind of go into the self-help and development, personal development, they've got some good stuff. I quite like it. And if you get any of his audio tapes, I've got one or two of them because I used to be a smoker. My name's Phil. I used to be a smoker. I got his quit smoking thing, and it was quite good many years ago. I've not been a smoker for a long time. But they've got some good stuff. They've got some memory stuff. They've got some mindset stuff. They've got just some general meditation stuff. They actually work with center points. They've got the binary beats in the backgrounds of their audio tapes. So if you're into that, it's just, again, these guys have spent years researching it. So you might as well tap into their research rather than try and learn it from brand new. Always good to get good mentors anyway. And Steve, very kind words. Thank you very much. I really missed the opportunity there to bang my chest and say, yeah, I've got some amazing programs. I'm not that person, but thank you for your kind words. Don't forget, Phil's got lessons on the strategy side of things that will allow us to certainly from the strategy point of view, because we quite literally only scratched the surface on the certainly the strategy side of things. And these sorts of things, when they come up in the group sessions, both these Friday open sessions and in the private group sessions, we can go into a lot more detail and interact. Kim, you should receive an email from me. My website is AntiVestor.com. And you can pretty much see any of the emails from me. AntiVestor.com. So yes, so good questions. Everyone's thrown some last minute questions there. But wait, there's more. I don't think there's any other questions. Great. So a great place to finish. I'd like to finish off by just saying thank you. I said every week, and I do truly mean it from the bottom of my heart, we could all be doing other things with our time. So thank you for taking time out and spending it with me. I take my own personal time. It's very, very precious to me, as you can gather. I like to do these sessions free. So thank you for spending it with me. It really is appreciated. If you got any value from today's session, all that I would ask is that you share the replay. It'll be ready later today or over the weekend with two people who need to see it. And if you can just take action on what you've learned today, that would be awesome. That really does mean the world to me. If you've got a success story, if you want to share it with me, send me a message. You can get to me via my Slack group. I have a small community. Again, the link is in any of the emails. You scroll down to the bottom of the emails, you'll see, this is my swing trading community. So you'll see some of the messages. You can just click on my name, Mr. Phil Newton, or you can just hit reply in the email and, just let me know what your thoughts are. Always open to some feedback. Next steps for one or two people, you may want to take the next step. You might want to learn the exact details of my strategy. The easiest thing to do is to go to AntiVestor.com, which is my website. Once again, I'll pop it in the chat box, which is there. You should be redirected. And again, when you leave the session today. So what was I going to say? Oh, yeah. So if you want to talk more, that would be great. If you do want to talk now, I'm going to stay around for a short while longer. So if you want to talk, just raise your hands and I'll turn the mic on. I'll turn the recording off and we can chat a little bit about how I might be able to help you along your trading journey. But that's it for now. Just a very soft invitation to talk. If you've got, once again, if you've got value from it, I would encourage you to like and share either this or some past sessions that you may have been involved with. If you've got some value from it. But I think that's a great place to finish. Finally, where are you? No, wrong one. There we go. Just want to once again say thank you for taking time to spend with me today. It really is appreciated. What do you got planned for the rest of the day? I don't know. Make sure you have fun. Make sure you enjoy yourself. The sun is shining today. I don't think it's an ice cream day. Maybe it's a chocolate cake day for me. I certainly plan on enjoying the weekends, and I trust that you will do the same. I'll see you all at the same time, same place next week. Bye for now.